What if the global financial system you trust was never truly shaped by nations, but by a handful of families whose heirs quietly inherited the power to move markets, influence governments, and dictate the rhythm of economic rise and collapse? This question may sound dramatic, but throughout American history, wealth was not merely accumulated, it was engineered into a structure that allowed certain bloodlines to mold the future of capitalism. In the early days of expanding American industry, while the public focused on innovation and progress, a silent web of financial influence was already forming behind closed doors. These heirs did not just inherit money, they inherited strategies, networks, and the ability to bend the financial landscape to their advantage. That is the forgotten starting point of a story that still defines modern Wall Street. To understand how this happened, you need to picture a world where capital flowed not through markets, but through family legacies. Deals were sealed in private rooms, alliances were built on inherited trust, and fortunes grew through patterns that repeated across generations. As these families expanded their influence, they began shaping the foundations of modern banking, currency stability, international loans, sovereign debt, and even the mechanisms that control economic crises. When you study these origins, you realize the system we call global capitalism carries the fingerprints of individuals whose names rarely appear in textbooks, yet whose decisions carved deep channels in world history. This opening reveals something that affects all of us today. Financial cycles, market shocks, and economic revolutions often trace back to choices made decades earlier by people who never imagined their influence would become global. You might even recognize some of these patterns in the economic turbulence we live through now. Have you ever felt that certain crises seem too perfectly timed, too strategically beneficial for a select few? You are not imagining it. The deeper you look, the clearer it becomes that historical patterns repeat because the architects behind them learned how to make them repeat. Before we continue unfolding this hidden architecture of power, tell me something. Have you ever suspected that financial outcomes were shaped long before they reached you? Share your thoughts in the comments, and if this perspective is opening your eyes to how economic forces truly operate, make sure to leave a like and check if you are already subscribed to the channel. What comes next will connect these early legacies to the global mechanisms that still influence every economic shift you experience, leading us deeper into the story without closing any doors yet. As the influence of these early fortunes grew, something remarkable began to happen. The heirs of American wealth transformed from passive inheritors into active engineers of the economic system itself. They stepped into a world already shaped by their predecessors, but instead of merely preserving these empires, they expanded them using new financial instruments, political alliances, and a deeper understanding of how economic cycles could be manipulated. In their hands, wealth became a tool not only for maintaining power, but for predicting and controlling the trajectory of entire markets. This shift marked the birth of a new financial class, one that operated above traditional institutions and quietly dictated the rhythm of national prosperity and crisis. These heirs were not improvising. They learned to read long-term economic signals the same way their ancestors learned to control railroads, steel, and oil. They recognized patterns in banking failures, currency fluctuations, international expansions, and government borrowing. By studying what had happened before, they crafted strategies that positioned them to benefit from whatever came next. When the United States began its ascent as a global financial force, these families were already laying the foundation for systems that would influence everything from interest rate policies to foreign investment flows. Their vision extended far beyond national borders, turning American financial power into a blueprint for global dominance. What makes this period so important is that it created the invisible framework still used today. Stock market behavior, corporate consolidation, foreign debt structuring, and even the idea of economic rescue mechanisms all grew from the ambitions and calculations of these hereditary elites. They anticipated cycles of expansion and contraction and positioned themselves to profit from both sides. This was not luck. It was strategic adaptation built on decades of observation and the safety net of generational wealth. Once these methods proved effective within the United States, they began influencing how other nations structured their financial systems, often without realizing they were following patterns crafted by a small group of American heirs. As their influence spread, the world unknowingly adopted structures that echoed decisions made in private estates, corporate boardrooms, and exclusive financial circles. Every market expansion carried traces of their early experiments, and every downturn reflected mechanisms they had learned to exploit. Understanding this evolution is essential because it reveals how the modern financial system did not emerge naturally. It was shaped, layer by layer, by individuals who understood that controlling money was the most powerful form of geopolitical influence, And with each generation, the ability to shape economic destiny moved further away from public institutions and deeper into the hands of those who mastered the hidden patterns guiding global finance, leaving us on the edge of the next chapter of this unfolding story. As the heirs solidified their presence within American finance, a new dimension of power emerged, one that went beyond simple inheritance and entered the realm of structural influence. They began reshaping the internal dynamics of Wall Street itself, turning it from a competitive arena into a strategically coordinated network of institutions aligned with their long-term interests. Banks, investment houses, insurance firms, and later corporate conglomerates all became interconnected through shared boards, private agreements, and generational alliances. This was not accidental. It was the result of a deliberate effort to control the financial bloodstream of the United States, ensuring that decision-making gravitated toward the same small circles of influence. What made these heirs uniquely powerful was their ability to influence both public perception and institutional behavior. They financed research, think tanks, political campaigns, and emerging industries, creating an environment where their preferred economic philosophies became widely accepted as national policy. They shaped narratives about capitalism, risk, growth, and the role of government in the economy. Many of the ideas still considered fundamental to American financial culture were originally crafted to protect their interests and stabilize the systems that preserved their dominance. The public rarely noticed this. Most believed these shifts were organic responses to economic needs, not the result of private strategic planning. Inside Wall Street, their presence became even more pronounced. They established investment frameworks that rewarded consolidation, encouraged speculative cycles, and created new forms of leverage that amplified their ability to influence outcomes. By controlling the flow of capital, they could support certain companies while allowing others to collapse, not based on market fundamentals, but on long-term strategic goals. During periods of economic expansion, they fueled rapid growth through aggressive lending and investment. During downturns, they acquired weakened assets at a fraction of their value, reinforcing their position with every cycle. Over time, these patterns became embedded into the very structure of American financial behavior. This internal reshaping of Wall Street also had geopolitical implications. As the United States grew into a dominant global power, the methods crafted by these heirs were exported abroad through financial agreements, international investments, and institutional partnerships. Countries around the world unknowingly adopted practices born from private American interests, believing them to be universal models of economic modernization. The heirs understood that controlling Wall Street meant controlling the engine that would drive global influence for decades to come. Their impact extended far beyond American borders, setting the stage for a financial order in which the ideas, preferences, and survival strategies of a few families would echo across continents, shaping decisions that millions of people depended on, without ever knowing the true origin of the systems guiding their fate. As American financial influence began radiating outward, the heirs understood that controlling domestic markets was no longer enough. True power required shaping the mechanisms that governed the global economy. This was the moment when private strategies evolved into worldwide frameworks. These families and their financial descendants became architects of international institutions, advisors to foreign governments, and silent partners in global lending networks. What appeared to be an effort to stabilize world markets often served a deeper purpose, extending the reach of American financial philosophy in a way that ensured long-term dominance and predictable cycles of influence. By embedding their logic into global structures, they transformed economic expansion into a geopolitical tool. Nations struggling with debt, inflation, or instability turned to American financial institutions for guidance, unaware that the solutions presented were rooted in strategies refined by generations of heirs who understood how to profit from both crises and recoveries. The same cycles once mastered within the United States now repeated on a global scale. Currency adjustments, bailout agreements, development loans, and investment thresholds reflected patterns that benefited those who had studied them for decades. Behind the scenes, advisory committees and financial boards were often filled with individuals connected through legacy networks, all trained in the same doctrines that had shaped Wall Street's early evolution. The most influential tool these heirs wielded was the creation of global dependencies. By establishing financial infrastructures that linked nations to American markets, they ensured that economic turbulence in one region often funneled strength back to the systems they controlled. International banks mirrored American practices, foreign investment portfolios adopted American risk models, and emerging economies restructured themselves according to frameworks originally designed to protect the interests of private dynasties. These shifts were not obvious to the public. They appeared as natural progress, guided by experts and policymakers. Yet beneath the surface, the same fingerprints kept reappearing. This expansion of influence created a world where global economic behavior became synchronized with strategies first tested by American heirs generations earlier. Nations believed they were modernizing, when in reality they were stepping into a cycle engineered to be predictable and profitable for those who understood its design. These patterns explain why financial shocks often ripple across borders in such familiar rhythms, and why certain countries consistently emerge strengthened while others remain vulnerable. The deeper you examine these structures, the clearer it becomes that global finance did not evolve spontaneously. It was shaped by intentions that reached far beyond national interests, forming a network of influence that still guides decisions made in capitals around the world today, even when those decisions seem independent. Before we move forward, share your perspective. Which part of this hidden influence feels most significant to you? Leave a comment below with your thoughts, as understanding these patterns starts with recognizing how deeply they shape the world we live in. As the American financial model spread across continents, the influence of these heirs evolved into something far greater than international guidance. It became the blueprint for how nations structure their ambitions, their risks, and even their interpretations of economic success. Governments that once relied on local traditions of commerce began adopting systems deeply rooted in Wall Street logic, often without understanding the historical motives behind them. This global alignment allowed American heirs to operate within a landscape where their strategies were not only expected, but normalized, giving them the ability to anticipate market reactions with uncanny precision. By exporting their financial architecture, they created a world where their methods would remain relevant regardless of cultural or political differences. With this expansion came the solidification of global financial institutions that served as both guardians and enforcers of the American model. International banks, regulatory bodies, and cross-border investment frameworks appeared, neutral on the surface, yet many were shaped by individuals trained in the economic philosophies tied to these wealthy dynasties. Their decisions were presented as objective expertise, masking the fact that they were rooted in patterns refined over generations. Through these institutions, the heirs extended their influence far beyond any single nation, embedding themselves into the infrastructure of global economic governance. As countries modernized their financial systems, they unknowingly synchronized their economic cycles with those engineered by the United States. This synchronization meant that the rise and fall of markets across the world often mirrored the same predictable rhythms studied by American elites decades earlier. Booms expanded wealth for those already positioned to capitalize on them, while busts created opportunities for strategic acquisitions and long-term consolidation. Even nations that attempted to break away from global financial norms found themselves pressured back into alignment by the interconnectedness of trade, investment, and international lending. The more the world adopted these systems, the easier it became for a small group of heirs to remain at the center of global financial gravity. This global adoption also reshaped competition. Emerging economies frequently believed they were challenging American dominance, yet they were playing a game defined by rules crafted on Wall Street. The heirs understood that control does not always require direct intervention. Sometimes it is achieved simply by establishing the parameters within which others must operate. As decades passed, the American financial model became so ingrained in international markets that even attempts to reform it still reflected its fundamental principles. This pervasive influence explains why certain crises recur with familiar patterns, and why the same groups consistently emerge unscathed. Through the global spread of their systems, these heirs ensured that the core of modern finance would always echo the strategies that once served them privately, creating a world where their legacy continues to operate quietly in the background of every economic shift. As global markets became more aligned with American financial principles, the heirs discovered something even more powerful than influence: predictability. By recognizing how nations responded to similar pressures, they identified repeating cycles that transcended borders and eras. These cycles were not random fluctuations, but structured patterns shaped by debt expansion, speculative growth, political intervention, and inevitable correction. The heirs studied these movements with the same diligence their predecessors once applied to controlling industrial monopolies. They understood that crises were not failures of the system, but essential components of it, opportunities disguised as downturns. Over time, they learned to anticipate collapses long before they occurred, positioning themselves to benefit from the aftermath, while others struggled to survive. This mastery of cycles allowed them to manipulate economic behavior on a scale previously unimaginable. By influencing lending standards, investment trends, and public narratives around risk, they guided markets toward predictable outcomes. They knew that rapid growth would inflate expectations, that inflated expectations would lead to instability, and that instability would open the door for strategic acquisition and consolidation. These phases repeated across decades, each time reinforcing the dominance of those who understood the deeper logic behind them. The heirs did not create the cycles themselves, but they perfected the art of using them as tools, allowing them to accumulate power in moments when others saw only chaos. The true sophistication of their approach lay in their ability to appear reactive while actually being proactive. When crises emerged, they stepped forward with solutions that conveniently strengthened the structures they already controlled. Rescue loans, liquidity injections, and strategic partnerships were often framed as efforts to stabilize the global economy, but they also expanded the reach of institutions tied to their networks. This dual effect allowed them to shape the recovery process in ways that ensured future cycles would unfold within familiar boundaries. Recovery was never just about restoring markets. It was about preparing the ground for the next predictable wave of expansion and contraction. The patterns became so consistent that modern historians and economists now trace many global financial events back to frameworks originally structured by these elites. What appears as organic market behavior often reflects decisions influenced by individuals who understood how to use timing, leverage, and perception to guide outcomes. This long-term perspective is what sets them apart. While most nations and corporations respond to immediate pressures, these heirs operate within generational timelines, seeing each cycle as part of a much larger trajectory of power. The more one studies these repeating patterns, the clearer it becomes that global financial volatility is not merely a force of nature. It is a system shaped, interpreted, and leveraged by those who inherited not just wealth, but the knowledge of how to navigate its hidden currents. As financial cycles continued to repeat with striking familiarity, another layer of influence emerged. The ability of these heirs to not only anticipate crises, but to shape the conditions that triggered them. Through strategic lobbying, coordinated investment shifts, and highly targeted pressure on regulatory environments, they learned how to tilt markets toward instability when advantageous, and toward recovery when necessary. This interplay between cause and effect became a central mechanism of their power. The same patterns that once played out within the United States now unfolded on a global stage where economic tremors in one region could be used to create opportunities in another. The heirs operated with a level of detachment that allowed them to see crises not as disasters, but as essential recalibrations in a system they understood better than anyone else. Their reach extended into geopolitical arenas, where financial influence often carried more weight than military presence. By leveraging credit lines, sovereign debt agreements, and international investment flows, they shaped the political destinies of nations without ever stepping into public view. Governments, dependent on liquidity, found themselves tied to the conditions imposed by institutions aligned with these dynasties. Policies that appeared to be economic necessities were frequently the result of strategic maneuvering designed to reinforce long-term control. The heirs did not need to dictate political outcomes. They simply created environments where certain choices became unavoidable. One of the most revealing aspects of their influence is how they managed perception. Public narratives around crises often focus on market greed, political missteps, or unforeseeable global events. Rarely do they reveal the role of those who benefited from the instability. Through media influence, academic sponsorships, and advisory roles, the heirs helped frame economic events in ways that protected their interests and deflected scrutiny. Each generation refined this art, ensuring that even in moments of collapse, they remained invisible to the broader public. This invisibility became their greatest shield, allowing them to act freely while the world debated surface-level explanations. Their involvement in crises also shaped opportunities for strategic accumulation. During downturns, assets such as real estate, energy infrastructure, and failing corporations could be acquired at reduced values. These acquisitions were not random or opportunistic. They were calculated moves aligned with long-term shifts in global markets. By guiding recovery efforts, they positioned themselves to benefit from the next wave of growth, reinforcing the cycle that had sustained their influence for more than a century. Understanding this dynamic is essential because it shows that global financial crises are not merely historical accidents, but phases that consistently advantage those who have mastered their logic. Before we move forward, share your perspective. Which part of this hidden cycle of crisis and opportunity resonates with you the most? Leave a comment and let your voice be part of this unfolding understanding. As these patterns of crisis and recovery solidified, the heirs refined a new form of influence that operated almost entirely in the shadows. The preservation of long-term advantage through strategies invisible to the average participant in the global economy. This influence did not rely on overt control or public authority, but on a deep understanding of how interconnected systems respond to pressure. They knew that markets move not only through data and policy, but through expectation, sentiment, and the subtle signals that shape collective behavior. By guiding these signals through institutional channels and private networks, they created outcomes that seemed natural, even inevitable to outside observers. The true sophistication of their power lay in making manipulation appear as organic evolution. Across decades, this strategy manifested in subtle yet impactful ways. Investment flows shifted in patterns that favored certain sectors long before public awareness caught up. Regulatory changes emerged at precisely the right moment to open doors for expansion while closing them for potential competitors. Innovations in financial technology, derivatives, and automated trading provided new tools that amplified advantages for those with the resources to understand them early. Even global events that appeared unrelated to finance often aligned perfectly with the strategic needs of these dynasties, suggesting a level of foresight that bordered on predictive. The heirs did not need to control every variable. They simply needed to position themselves where the outcomes of large-scale movements would naturally reinforce their standing. This long-term positioning allowed them to transcend normal economic risk. While most investors reacted to news cycles, inflation pressures, or geopolitical uncertainty, the heirs operated according to deeper patterns that stretched over generations. Their strategies resembled the movements of a chess grandmaster who plans not one or two moves ahead, but entire sequences designed to shape the flow of the game. They invested in influence, not just assets, in systems, not just returns. Their understanding of global finance became less about chasing opportunities and more about shaping the conditions under which opportunities would emerge. In doing so, they embedded themselves into the architecture of modern capitalism so thoroughly that the system could not function without reinforcing their presence. As time passed, their influence became increasingly difficult to trace. Many of the institutions they shaped outgrew their original forms, evolving into massive entities that operated across continents. Yet the foundational logic behind their design remained intact. The frameworks governing global investment, corporate expansion, sovereign debt, technological innovation, and even crisis response still reflected the same patterns refined by their predecessors. What appears today as a highly complex, interconnected economic landscape is, in many ways, an extension of decisions made decades or even centuries earlier by individuals who understood that power is most enduring when it becomes indistinguishable from the system itself. And in this indistinguishable space, their influence continues to quietly guide the forces shaping the world. As the hidden architecture of global finance matured, the ability to interpret historical patterns became one of the greatest advantages held by these heirs. They recognized that the past was not a collection of disconnected events, but a map revealing how power behaves when concentrated in the hands of a few. Every major economic transformation, from the rise of industrial capitalism to the digital revolution, followed underlying rhythms shaped by expansion, consolidation, disruption, and reinvention. These rhythms were not accidental. They were the predictable outcomes of systems built to favor those who could see beyond immediate conditions. By studying centuries of economic cycles, these heirs refined the skill of predicting not just market shifts, but societal reactions, political changes, and geopolitical realignments that would follow. This predictive insight became a guiding force behind decisions that shaped the modern financial world. They knew that technological revolutions would reorganize labor markets and create new corporate empires. They understood that growing national debt would eventually force governments into dependency on international lenders. They anticipated that globalization would make countries increasingly vulnerable to external shocks. And they recognized that the appearance of stability often preceded major upheavals. With each emerging trend, they positioned themselves in sectors where disruption would generate the highest returns, ensuring that the turbulence others feared became a source of compounding advantage. Their strategies reflected not confidence in the present, but clarity about the trajectories already set in motion. These historical patterns also revealed something deeper. Every financial empire eventually reaches a point where its influence begins to fracture. For most nations, this marks the beginning of decline. But for these heirs, it represents a moment of strategic recalibration. They understand that no system remains dominant forever, yet the individuals who understand its collapse often seize the greatest opportunities. Rather than resisting change, they map its direction and prepare to harness it. This is why their influence has persisted across generations, even as the economic landscape has transformed repeatedly. Their advantage is not tied to a specific era or technology, but to their ability to see the structural forces beneath the surface. Today, those same patterns point towards another pivotal shift in global finance. Rising debt levels, concentrated wealth, technological dependence, political polarization, and weakening trust in traditional institutions all mirror conditions that historically preceded major realignments. While governments and corporations attempt to manage these pressures, the heirs observe with the same calm precision that has guided their decisions for more than a century. They recognize that the fractures appearing now are not anomalies, but signals, indicators that the global system is approaching another turning point. Understanding these signals is essential because they reveal not only where the economy is heading, but who will shape the next era of financial power, continuing a legacy that has quietly influenced every chapter of modern history. As the indicators of a global turning point grow stronger, the heirs, who have long shaped financial history, prepare for what comes next with the same composed precision that defined their rise. They understand that moments like this do not signal the end of a system, but the transformation of it, and transformation has always been the environment where they thrive. While governments attempt to stabilize markets and institutions rush to adapt to rapid change, these heirs focus on deeper structural shifts that unfold quietly beneath public attention. They watch how technological acceleration reshapes economic dependencies, how geopolitical tensions alter trade routes, and how public distrust in traditional structures creates openings for new financial models. To them, the world is not entering chaos. It is simply revealing the next phase of a pattern they have studied for generations. This perspective allows them to move with unusual confidence while others hesitate. They know that wealth concentration tends to intensify in transitional periods, that new global powers often rise when old institutions lose credibility, and that markets reward those who understand. Long-term cycles rather than short-term fluctuations. What looks like uncertainty to the world appears to them as a familiar sequence. Their strategy is not to resist the forces reshaping the global order, but to flow with them, positioning themselves where historical momentum is already heading. This is why their influence has survived wars, ideological shifts, technological revolutions, and repeated economic collapses. Their advantage lies not in avoiding disruption, but in recognizing its direction earlier than anyone else. Today, as trust in currencies weakens, digital systems expand, and nations compete for economic relevance, the heirs, once again, stand at a crossroads where old structures are fading and new ones are emerging. They understand that the future will belong to those who interpret the signals correctly, who see beyond political narratives and market noise into the underlying logic of global transformation. And they know that the same patterns that guided their ancestors remain active, forming a bridge between past and future. The next financial era will not be shaped randomly. It will emerge from choices, alignments, and strategies already unfolding across the world, many of them influenced by individuals who prefer to stay unseen. If you reach this point, it means the story resonated with you in ways that go beyond historical curiosity. Consider subscribing to the channel so you can continue exploring how these hidden forces shape our world. Leave a comment saying, "This message was for me to mark that you followed this narrative to the end." And if the ideas here expanded your understanding, a like helps bring more people into this conversation. There is another video waiting for you that deepens these insights. So when you are ready, continue the journey and see how the next chapter connects with everything we uncovered here.